In this video I am going to explain you a very powerful tool in Tradingview, the fixed range volume profile, how to read it, how to use it and how to integrate it in your trading style. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Without further ado, let's start diving in. Before I'm going to show you the tool, I just want to make one remark, and that is that there are multiple volume profiles, tools and indicators in Tradingview. And I'm going to make a follow-up video about the differences in these tools and how to use them and the do's and don'ts. But I'm going to make a separate video because or else this video becomes too long and it becomes too complicated. So today we're only going to focus on this fixed range volume profile. And if we want to use this tool, it works the best in, guess what, a range. Now a lot of traders would say, I just like it when price goes up because then I can long, or when price goes down because then I can short, just trade with the market, easy, done. But the reality is that most of the time price is in a range. It moves sideways in a range from up, down, down, up. And if you know how to read it and how to trade it, these ranges can be super profitable, and you don't have to wait for a big drop for a short or a big pump to only go long. So first of all, how do I identify a range? Well, very simple, by just using our eyes. We are right now on the Bitcoin chart on the 4 hour. I could have pulled up anything, a stock, commodity, any crypto, it doesn't matter. This works on everything. So we are here on the 4 hour, and I think we can all agree on that the range is somewhere like this. The bottom is a little bit subjective, but the range is starting somewhere around here and is ending somewhere around here, and then price moves higher. So there's a very big range, end of February all the way to the beginning of November. And once we have identified that range, we are using the fixed range volume profile. I have it here as a favorite, as you can see. But you can also find it here in the indicators, and then you just type in fixed range and then you see it, volume profile. If you select it, it pops up right away, and then you can use it. And you just drag it over the area that you have identified as a range. And then you see the following popping up. I'm going to take away the block to make it as easy visible as possible. And then you see the following. We have a thick blue line here on top. We call it the value area high. Then we have a thick blue line at the bottom. We call that the value area low. And we have this red line that is called the point of control. Now, how do we need to read this? We're saying that everything above the value area high is seen as overvalued. So that's this area right here. And you can also see that in the indicator this is a little bit grayish. It's a little bit lighter. And everything underneath this thick blue line, we see that as undervalued. And you can also see that this is a little bit lighter. And everything within this value area low and value area high, so that's this area right here, is seen as fair value. So the market has decided this is fair value for the asset. Everything above is overvalued, everything underneath is undervalued. Now, if the first time if you plot this tool, this indicator on your chart, it will not look like this. If you double click on it, then you can see that my row size is 200. For you, if I'm not mistaken, it is standard somewhere around 20 something. That row size is literally the amount of rows here from the top to the bottom. So if I move this now, if I change this now to 100, you can also see that suddenly I only have 100 bars or I only have 50 bars. Now I like 200 because it gives me the value area high, low and point of control in great detail, and I like to see the exact price level. And here you can also see the value area of volume, that is 70, and that is 70%. That means that the fair value is within a range of 70% of the trading volume. So right here, this is 70% of the trading volume. Can you change that? Yes, you can. You can just change this to, let's say, 50. Then you also see that the tool will change. Or maybe you want to say, for me it is 80. You can also see that now 80% of the trading volume is within the value area high or low. I like it 70. So please feel free to just copy this. The row size 200 and the value area volume is 70. And then we still have that point of control. I have not explained that yet, and that is the most traded volume. That means in the entire area that I just selected, the price of 67,000 is the most traded volume. But as you can also see is that this area right here, these bars, they are almost as long as this area right here. So if price would have spent a little bit more time around this price level right here, this bar would have been longer and this would have been the point of control. And that area is right here at 63. Well, you call this within the volume profile a high volume node. So it's not the point of control, the most traded volume, but it is an area where it was very, very crowded. And as you can see, we have a high volume node here, we have one here on top, and we have one here. So that's very important to note right away. A jam, a secret giveaway. You don't see or hear this a lot, but it might offer support and resistance once price reaches one of these areas. Now I have pulled the volume profile over the entire area, but you can also see that if I have it all the way here in the beginning, that the value area low, high and point of control are in a complete different level. Because once price starts entering this range, we don't know yet how long it will be there, and of course the traded volume will also constantly change. So now you can see that the point of control is here at 67 and the very low is here at 64. And look what happens to the very low, high and point of control once I keep dragging it a little bit more to the right, because we have new days, we have new candles, therefore we have new data that is in the candles, and therefore you can also see that these values are constantly shifting. Now I go back, look again at these three values, very low, high, point of control, and you can see that that is constantly shifting a little bit depending on the traded volume within that area. Can we also make sure that this just drags along automatically, that we don't constantly have to drag it over the new candles that are being printed? Yes, you can. Double click again, and there you see here extend to the right. The only problem with this is it will extend all the way to the right, so all the way to the current candle, to the current price level, and then it will give you the very low, high and point of control. So yeah, of course a range is a range until it is broken, so actually you also want to only have it maximized until the range. So therefore usually I have it extend to the right until I can clearly see that we're leaving the range. Now here it becomes a little bit difficult, because when is price leaving a range? Usually that is always a little bit hindsight, because you could also say that, well, here it really looked like price was dropping down and leaving the range, but eventually it bounced up anyways and then it came back. So yeah, that is sometimes a little bit hard to distinguish and to really determine once price is down here if it really is leaving the range, or are we eventually going back, because price might have just kept dumping down, create a range here, and then eventually go back, and then this was your new range. But of course you don't know that once price is really at that level. Okay, now I've shown you how to drag it, why it can change, how it can change, what my settings are. Now let's look at how to interpret this and how to trade this. I would explain to you that everything underneath the value area low is seen as undervalued. Well, that means that or there's a big chance that price will eventually move higher, because this is seen as quote-unquote cheap for this price range that we are in. That's also exactly what happens. You can see that price is underneath that value area low. In other words, the market thinks it's undervalued. Then we are reclaiming that value area low and we are retesting it as support, because it was resistance before. You can also see it here, it was resistance, and now it is support, and then you can see the price is traveling to the point of control, spending quite some time there, and then eventually it goes back up to the value area high. Hey, now it's overvalued, people are starting to sell off, and then you can see the price goes back again, goes to the most traded volume, the point of control, spent quite some time there, and eventually it goes back to the value area high, and so therefore it goes from the top to the bottom, from the bottom to the top. Now, does that mean put in a long trade once we're underneath and put in a short trade once we are above? No, that is not what I'm saying. I would never blindly put long or short orders on the top or the bottom. However, it does give us a very strong indication or direction of where we are in a range, and if we need to interpret this as undervalued or overvalued. Because once you're longing and shorting, you want to short the top, right, to play to the downside, and you want to long the bottom to play to the upside. And therefore this tool is actually so great because it just gives an indication, okay, we are undervalued right here. I need to start looking for longs once we start moving up again, or once we're getting a backtest. This is my sign to get in, to play it to the upside, and then we'll see how far it travels. And here it's the exact opposite. Okay, we are overvalued right now. Let's see if I can get in maybe on a backtest, like you can see here, very clear backtest, to play it to the downside. And eventually once we're at the bottom again, I'm just going to try to long it again. Let's say you would just taken this right here on the backtest, stop loss above the high all the way to the bottom. That would have been at least a 1 to 4, $100 in, $400 out. And this is kind of how you need to see this and how you need to interpret this. Now there is one more thing that I see a lot and where I'm not such a fan of, and that is that people are trying to long, let's say, the bottom, and they are going to also take a trade around that point of control. There are two iffies about this, and that is that the point of control is the most traded volume, so it is the most crowded. Of this entire range that I just draw, the point of control is the most crowded. And in my experience is that you get the best reactions of levels where it is not so crowded and where therefore you don't have a point of control. So in other words, the top and the bottom, and usually of course I want to see something more than just this volume profile. But yeah, too long or short at the most crowded point in the chart is usually not such a strong setup. Also, you can see that the point of control is somewhat in the middle. We have a big part here above, and we have a part underneath. And yes, sometimes that point of control is slightly more up or slightly more down. Like I already said, if we would have traded here a little bit longer, this would be the point of control. But in other words, if you're longing or shorting, for short you want to short the highs, and for long you want to long the bottom. But with the point of control you're kind of in the middle or somewhere in the middle, and you kind of need to hope that eventually price will continue up or will reject and go lower. So therefore longing or shorting of a point of control is not the best setup. I would therefore wait until price has traveled to the very area high to short, or to very area low to long. And you can also see that sometimes it can be a little bit ugly and a little bit crowded here around that point of control. As you can see, this would have been a great long. Then eventually price is reclaiming that point of control, is testing it, is losing it, is reclaiming it, losing it again, and then eventually we're traveling to the very area high. Hey, we're overvalued. I need to look for a short, and then the point of control does give you here a clean bounce for once, and then eventually we're leaving the range here. But this could have still been a great trade here from this short, and okay, this would have played out, but you can see, as I said earlier, this area right here would have been actually very ugly and very hard to trade if you constantly want to open up shorts and longs from that point of control. So yes, you can do it, and I've seen traders doing it, but I'm just not such a fan. Again, pretty crowded, and B, you're a lot of times longing or shorting somewhat in the middle of a range, and you want to do that from the highs and the lows. Now last but not least, this is a very big range. Like we already said at the beginning of the video, we're starting off here at the end of the February all the way to the beginning of November, and of course while you are creating this range, you're also making a range within a range. So what I'm now going to do is I'm going to zoom in on the 1 hour, and I want to show you that this not only works very well on the bigger time frames, but also on smaller time frames. So let's see if I can find something here within the range. Let's say this area right here. This is so above the point of control and at that very area high. I could say that this right here is another range within that very big range that we just looked at. Now I'm going to pull a volume profile here as well. If it works, there you go. And there you can see that the point of control is here at the bottom, and that very area low is also pretty nicely respected actually. If I'm now zooming in here on the 1 hour, look at all these candles that are bouncing off this local volume profile very nicely, in that it offers support on the very area low. You can see again, ooh, very crowded here at the point of control, and also here at the very area high. Well, it now lines up together with the macro very area high, that it offers resistance when it needs to, and that once we are breaking it, there's actually not a clean retest, and then we're breaking it again. Let me see if I zoom in here, and then here you can see it offers a perfect resistance again, so this could have been a local short and then eventually lower, and here again perfect resistance. So you can have these ranges within ranges, and especially once you're trading a bigger range of multiple weeks or even months, I would highly recommend you to do it, because you can also see here that price is in this range for 23 days. Now you don't want to be on the sideline for 23 days or waiting until price eventually leaves that macro value high to travel to the downside. You can make so many trades within this range. Matter of fact, let's look up one more range within this bigger range. I think this will probably offer us a few very nice taps on the very high, low, and point of control. Well, actually the very high here was pretty nice. You can see that here price was overvalued, travels back to the point of control, it tests it again, and it's getting a bounce to the downside. Here it's a little bit ugly, and eventually you're leaving it, you're retesting that macro value low, and then you are reclaiming it. Let's see, I have one more and then we're finishing up this video. Let's see if this very locally would play out. Now I'm now looking at a pretty tight range, but let's see if it works. Yeah, not bad, not bad. You can see also here on the 1 hour that actually this candle right here is then rejecting off the very high, rejecting off the very high, rejecting off the very high, bouncing off from that very low, bouncing off, bouncing off. This here is a little bit ugly, and here you can see point of control gets pretty ugly, but it is a lot of zigzagging. Therefore again, great example why I would not long or short right at this level. Just wait until prices travel then to the bottom, so you have a stronger risk to reward. So here you can see you can also make ranges within ranges. I hope that this was clear for you and that it was helpful. If it was, guys, please do me a favor by liking and subscribing. Click on the bell, click on all so you don't miss anything. And like I said, I will make a follow-up video about different volume profiles, tools and indicators within TradingView, how to use them simultaneously, but also what not to do and how not to get disorientated about all these different kind of tools that you can have in your screen. Thank you guys for sticking with me all the way to the end. And I'd like to see you again in the next one. Thank you so much. Bye bye.